Hey everyone, before we dive in, here's something really cool. You're listening to an episode created almost entirely by AI. From the script to the voice, this is part of the AI Takeover series by Blockchain DXB, where we explore what's possible when humans hand over the mic to machines. There's little to no human involvement, and that's what makes this episode so powerful. Welcome to the future of content creation. Let's get into it. This episode is powered by Amana, the region's first and fastest-growing regulated all-in-one trading and investing app. Whether you're looking to invest in U.S. stocks like Apple or Tesla, or MENA giants like Adinoc or Salik, Amana puts the financial market at your fingertips. You also get access to gold, foreign exchange, ETFs, futures, and commodities. With over 375 assets to choose from, they've got the largest crypto selection in the region. And listen, guys, if you want to build long-term wealth without thinking about it every day and want to automate your investing, just set your monthly budget, choose your preferred categories, and let Amana do the rest. No fees, no lockups, and 100% customizable. Even better, funding your account is frictionless, and funding your account is easier than ever. You can fund your account with Apple Pay, Google Pay, credit cards, instant bank deposits, and even your crypto wallet. No friction, no hassle. And if you get stuck, Amana offers 24/6 real human customer support and personalized sales assistance. Because you're part of the Blockchain DXB community, you get an exclusive offer. Register with the code BlockchainDXB and make at least one trade to receive a $100 trading bonus credited to your account the following month. So what are you waiting for? Download the Amana app now. The link and code are in the show notes. Next up, Blockchain DXB is proud to be the official media partner for one of the biggest blockchain events of the year, the Blockchain Futurist Conference. For the first time ever, North America's leading crypto event is heading to the United States, taking place at the iconic Guitar Hotel at Hard Rock in Hollywood, Florida. Alongside it is ETH Women, happening simultaneously. Expect multi-stage panels, NFT galleries, DeFi showcases, tech demos, metaverse experiences, and more, all under one roof. It's where the smartest minds in blockchain, crypto, and AI will converge. Get 25% off tickets by using the code DXB25. And yes, I'll be there with exclusive live coverage, behind-the-scenes interviews, and spotlight features on groundbreaking projects. Mark your calendars, November 5th and 6th, 2025. Visit futuristconference.com and use code DXB25. Link is in the show notes. Next up, Blockchain DXB has two more interesting partnership news to announce. First up, with Future Blockchain Summit and Fintech Surge 2025. Blockchain DXB is an official media partner of Future Blockchain Summit and Fintech Surge 2025. Future Blockchain Summit is one of the biggest and oldest blockchain summit taking place in Dubai, going back to almost a decade, 2017 to be precise. The event takes place between October 12th to 15th at Dubai Harbour. This is where blockchain meets fintech to redefine the future of finance. 250 plus world-class speakers, 1,200 plus investors, live demos, product launches, and the exclusive invite-only GITEX Digital Assets Forum, all under one roof. From Web3 pioneers to fintech leaders shaping payments, banking, insurtech, AI, and DeFi, this event brings the entire ecosystem together. Startups, this is your launchpad. Get in front of top VCs, accelerators, and industry leaders. For blockchain and fintech companies, this is where connections turn into partnerships and dreams turn into exits. Register today at futureblockchainsummit.com. Don't just watch the future unfold, own your space in it. Remember, Future Blockchain Summit and Fintech Surge 2025. The registration link is in the show notes below, and see you at Dubai Harbour. Second partnership news kicking off from today is with the leading Bitcoin event organizers on this planet. And this year, Bitcoin Asia is taking things to another level. Bitcoin Asia are hosting a massive gathering this August in Hong Kong, and Blockchain DXB is proud to be an official media partner of Bitcoin Asia 2025. Taking place this August in Hong Kong, Bitcoin Asia is the region's premier Bitcoin gathering, where builders, investors, and innovators meet. It's really an honor for blockchain DXB to be associated with Bitcoin Asia. Now at this event, expect powerful keynotes, bold conversations, and a headlining session with none other than Eric Trump. He will be sharing his vision for Bitcoin's long-term potential, its role in global finance, and Asia's massive impact on adoption, and a lot more. So listen up, guys. From infrastructure to regulation, privacy tools to lightning development, Bitcoin Asia connects global Bitcoin communities and drives innovation across cultures and markets. And as part of this partnership, you can register for the Bitcoin Asia using the code DXB. All the detail are in the show notes below. If Bitcoin's in your blood, this is your event. So, register today at asia.btc and don't forget to use code DXB for 10% off your tickets. Bitcoin Asia 2025, Hong Kong is calling. Be part of the future of Bitcoin. Next up, Advanced Media is the largest distributor of professional video, photography, cinema, and broadcast accessories in the Middle East. They represent over 100 major brands, including DJI, Hasselblad, Red, and Rode. The mic I'm using to record this? Sponsored by Advanced Media. But what really sets them apart is their commitment to purpose. People, planet, and prosperity. That's not just branding, it's their actual business model. They've partnered with SAE Institute in Dubai to offer scholarships to students pursuing a bachelor's degree in filmmaking, each worth AED 50,000. They also run regular workshops, training programs, and tech showcases across the region. For more info, visit amt.t, that's amt.tv. Finally, let's talk about something every crypto investor should take seriously: security. And that's where Ledger comes in. Ledger is one of the most trusted names in crypto security. Their hardware wallets, like the Nano S Plus and Nano X, keep your assets safe by storing your private keys offline. That means you're protected against hacks, malware, and phishing attempts that can compromise online wallets. The company is headquartered in Paris and is constantly innovating. Their team works with world-class security researchers and regularly tests their own products for vulnerabilities. It's why Ledger wallets are used by millions around the world. Using a hardware wallet isn't just smart, it's essential. If you're serious about crypto, it's time to stop relying on centralized exchanges or browser wallets. Click the link in the show notes to order your Ledger wallet and support this podcast at the same time.
Welcome to the Deep Dive. We're here to plunge into a stack of articles, research our own notes, basically arm you with the most important knowledge, fast. Think of it as your shortcut to understanding what's really going on. Today, we're navigating the currents of the digital asset world. It's dynamic, sometimes turbulent. We'll explore the latest global crypto market moves, the fascinating geopolitics hitting digital assets, also some recent setbacks, important reminders there, and some really innovative stuff happening regionally, like in Dubai and Saudi Arabia.
Exactly. And as we unpack all this, you'll start to see how interconnected it all is. These stories might seem separate, but they're not. We're here to help you connect those dots. Show how global economics, tech breakthroughs, even political power plays, they're all shaping blockchain's future. It's definitely more than just tracking prices. It's about seeing the bigger shifts.
Okay, let's dive in then, starting with the immediate pulse. The global crypto market, we saw that marginal pump in Bitcoin and others around Labor Day in the U.S., that was Sept 3rd. And the global snapshot, the numbers look much better over the last 72 hours, according to our sources. This quick bounce, especially tied to a U.S. holiday, it really shows the power of the U.S. market, wouldn't you say?
Oh, absolutely. The U.S. market sentiment, it just ripples out globally. It really does. And if we zoom out a bit, the key indicators are telling quite a story. We've seen crypto ETF inflows pick up. $14.9 million today. It's healthy, not crazy high, but solid. What's really fascinating, though, is the steady flow into Ethereum ETFs. Over the last 6 weeks, quite significant. It suggests, investors are looking beyond just Bitcoin now, more confidence in a wider range of assets.
Yeah, that's a strong sign. Diversification happening right there. So what about the overall market cap and specific coins?
Right, so the global crypto market cap, it's sitting at $3.91 trillion right now. That's up 1.9% in 24 hours. but it's still hovering just under that big $4 trillion psychological mark. Trading volume is also up 10% in 24 hours, about $153 billion. So activity is there. Looking at specifics, Bitcoin up nearly 2% in 24 hours. That's almost a $2,000 jump to $111,051. But, and this is important, if you look at the last 7 days, it's actually down 0.60%.
Oh, okay. So a short-term pop, but a weekly dip.
Precisely. And Ethereum, well, it hit that new all-time high last week. Right now, it's marginally up 0.59% in 24 hours to $4,320. But over the week, it's down significantly, 5.95%. Kind of that post-peak correction, maybe. Ripple XRP, that's up 4.17% to $2.85 in 24 hours. But again, down 5.14% over 7 days.
So yeah, definitely mixed bag, short-term gains, but the weekly view is a bit cooler for the big players. What else is defined this moment?
Well, stablecoins are still huge. Tether USD, USDT, leads the 24-hour volume easily, $126 billion. Circle's USDC is next at around $16.8 billion. And Tether just made a pretty smart move, actually, launching its stablecoin on Bitcoin's blockchain. They're using something called the RGB protocol. Basically allows more complex stuff, better security, right on Bitcoin's base layer, makes it more robust.
Interesting move, enhancing Bitcoin's utility.
Yeah, exactly. And meanwhile, DEX's decentralized exchanges, their volume hit $15.57 billion. Uniswap's still leading there. DEX dominance, so the share of trading on DEX, it's impressively high, over 40%. 44.05% actually. Though, we should remember many centralized exchanges use DEXs behind the scenes. And maybe the biggest signpost for the future, real-world assets, RWA. Their total value lock just crossed $15 billion. First time ever. That signals a huge step up in tokenizing tangible stuff.
Right. These market moves, they don't happen in a vacuum, do they? They often tie right back to, well, global politics shifting. Which brings us to a major development. This could really shake things up for crypto. Here's where it gets really interesting. The BRICS nations, Brazil, Russia, India, China, South Africa, plus the new members like Indonesia, Iran, they're holding a virtual summit September 8th, 2025. And the main agenda, discussing those U.S. tariffs from President Trump. Now, this isn't totally out of the blue. Trump warned BRICS, 2 months ago? Basically said don't focus on stablecoins or crypto. He wants a ridiculously strongest U.S. dollar. His proposed tariffs, a 10% levy on BRICS-aligned countries, and maybe up to 50% on places like Brazil and India.
Okay, yeah. And if we connect this to the bigger picture, these dynamics, they hit crypto in multiple ways. The BRICS goal is clear. Push back against the U.S., rely less on the dollar. That could definitely escalate economic tensions. We're seeing sort of 6 key potential impacts here. First, market volatility could spike, big time. U.S. tariffs mean economic uncertainty, and uncertainty often leads to short-term crypto sell-offs. People flee volatile assets. Keep an eye on ETF outflows. That'll be a key indicator.
Makes perfect sense. Uncertainty is like kryptonite for riskier assets sometimes.
Exactly. Second, this could actually speed up de-dollarization and boost crypto adoption. As BRICS looks for alternatives, their own currencies, maybe blockchain payment systems, even a potential BRICS unit, well, non-sovereign crypto could become more attractive for cross-border value transfer. Although our research notes their platform might not be fully ready, maybe a bit late compared to if they'd done this earlier.
So the intention's strong, but maybe the timing for the tech isn't perfect.
Potentially, yeah. That seems to be the suggestion. Third, there's a big push for regional digital payment infrastructure. Things like BRICS Pay, using blockchain systems. That could legitimize digital currencies, spur innovation, and that might boost interest in decentralized assets like Bitcoin. But again, the timing. Some sources say this should have been built years ago. Fourth, Bitcoin and crypto could become more appealing as a hedge. If these tariffs weaken currencies or spark inflation in BRICS countries, Bitcoin's role as a decentralized store of value is to grow, attract investors looking to protect against devaluation. That said, most BRICS nations don't really have a dedicated Bitcoin strategy right now.
So lots of potential for crypto to fill a need, but also, yeah, some big strategic gaps for these countries.
Indeed. Fifth, we might see a boost for specific BRICS crypto initiatives. Exploring blockchain payments might speed up, as a counter to U.S. financial power. That could increase crypto use for cross-border trade. But again, the source hints the opportunity might have been stronger under a different U.S. administration, just pointing that out. And finally, sixth, there's the risk of a regulatory backlash from the U.S. Escalating trade fights could lead to stricter U.S. crypto rules to stop crypto being used to bypass the dollar system. And that could stifle the crypto market's growth within the U.S.
Wow. Okay, that's a really complex web of potential outcomes. But our sources also point out this interesting U.S. countermove, the Genius Act, signed by President Trump. It's framed as A great political move. Why? It basically encourages U.S. stablecoin issuers to operate in these BRICS nations. And here's the clever part. If BRICS countries start using U.S. dollar-backed stablecoins, well, that increases demand for the underlying U.S. dollars, right? So it actually strengthens the dollar even as they try to move away. It's like financial jujitsu.
It really is. And this just raises that crucial question. How do these incredibly complex geopolitical games, all this push and pull, how does it fundamentally change the role digital assets play? They're clearly becoming instruments of global power, not just tech.
Right. And speaking of tech, let's pivot to a reality check. Some recent setbacks and risks in the crypto space itself. Because what does all this high-level stuff mean for the everyday user, right? Well, Ethereum's Layer 2, Starknet, had a nearly 3-hour mainnet outage, September 3rd, caused by a sequence of failures. What's worrying is this is their second outage in just 2 months. Users had to resubmit their transactions. The team says they'll do a full postmortem, which is good, but still 2 outages in 2 months. It's not a great look. For Starknet, or for Ethereum's ecosystem, really, reminds you a bit of Solana's early days, though those outages were often longer, maybe less frequent recently.
Yeah, those outages definitely shake user confidence. It's a reminder that even advanced scaling tech has growing pains. It really does. And beyond outages, security flaws are still a huge risk. Very real. A report from the Royal United Service Institute says Ukraine has lost over $10 billion to crypto crime. Money mule schemes are draining $24 million a month. The lack of strong regulations apparently leaves Ukraine vulnerable, a potential hub for laundering funds, even Russian funds. That risks deeper losses, erodes investor trust. The report suggests focusing on stablecoins, balance taxes, try to attract legit businesses, improve security.
$10 billion, that number is just staggering, really drives home the need for solid frameworks. It absolutely does. And then there was that exploit on the DEX BunniXYZ, an $8.4 million loss. Hackers basically manipulated its liquidity distribution function, the LDF, that's the math dictating payouts. They used carefully sized trades to fool the system, trick it into miscalculating balances. Think of it like gaming a smart vending machine to give you extra change. They found the trick, and this really highlights a specific risk with some DEXs compared to centralized exchanges. Centralized ones often have reserve funds, like Bybit's safe funds. Meanwhile, some users, like from the Wazir X issue, are still waiting years later for reimbursement. The BunniXYZ team, they acknowledged the exploit, paused the protocol temporarily. But yeah, that's cold comfort for the users who lost funds.
Right. But it's definitely not all bad news, not all challenges and risks. Some regions are really pushing forward with innovation, especially in the Middle East. Let's talk about some positive developments. RAK Properties in Dubai. They've partnered with Hape. That's an Abu Dhabi global market-regulated fintech.
Yeah.
And they're now accepting crypto for real estate payments. We're talking USDT, Bitcoin, Ethereum, major assets. This is quite significant. And the way they're doing it is smart. It's about the immediate conversion. Hape takes the crypto, instantly converts it to UAE dirhams, and settles directly to RK Properties account. So RK Properties itself, it doesn't touch the digital assets directly. That makes compliance much simpler, reduces their risk. And the impact, well, it massively broadens the appeal for international buyers. Plus, it fits perfectly with Ras Al Khaimah's Vision 2030 strategy, just enhances the whole investment environment there. It's a really clear sign, the region embracing digital assets for real-world use, but in a regulated, sensible way.
And sticking with that theme of innovation in the region, let's look at AI and healthcare in Saudi Arabia. This is a huge part of their Vision 2030, transforming healthcare to tackle chronic diseases, more patients, shortages of medical staff.
Absolutely. AI is seen as a really crucial tool there. Not a magic wand, not a silver bullet, but a vital tool to ease those burdens. And Saudi Arabia has the resources, both the people and the money, to really lead AI adoption in healthcare. It's a strategic priority. We're seeing key uses already, like advanced image recognition for faster, maybe more accurate diagnostics, predictive analytics, identifying patients at high risk. That means earlier interventions. They think it could cut hospital readmissions by 15–20%, operational cost by maybe 25%. Real impact. And telemedicine is booming. Virtual hospitals are already serving, get this, over 480,000 patients a year across 150 facilities, plus private apps like Lava for mental health, serving over 2 million users. The scale is just incredible.
That's a massive transformation happening right now.
It really is. But importantly, the ethical side isn't being ignored. Or shouldn't be. Human interaction, still critical. AI is there to support clinicians, not replace them. That's the goal. They have the Saudi data for AI Authority, SDAIA, ensuring patient privacy, ethical use, building that public trust is key. Looking ahead to 2030, the vision is AI driving preventive care, automating routine tasks, expanding digital access, and success. measured by better human outcomes, better quality of life.
Okay, fantastic. Now, we actually had a great question from a listener, Shell, and it ties right back to what we discussed about Starknet's reliability. Shell asks, after Starknet's repeated outages, would you still trust Layer 2 for decentralized finance or look at alternatives? What do you think?
That's an excellent question, Shell. Very timely. Look, while I don't personally use Starknet much, I wouldn't write off all Layer 2s because one project is having issues, every new scaling solution, they all go through these growing pains. We have to remember that. I mean, think back to Ethereum itself. It had that major blockchain rollback in 2016. That was huge back then. That being said, reliability is absolutely critical, especially for DeFi, right? Where money's directly involved. And yeah, 2 outages in 2 months for Starknet. That does impact confidence. For users, for investors, no question. So alternatives, definitely worth exploring. You've got established ones like Arbitrum, Optimism. They have relatively stronger track records, bigger ecosystems right now. ZK Sync is also gaining a lot of momentum, building a strong community. So my recommendation, and Shell, this isn't financial advice, of course, would be maybe to diversify, spread across multiple Layer 2s perhaps, rather than putting all your eggs in one basket. And Shell, this just reinforces that fundamental rule in crypto for everyone, really. Never, ever park funds you cannot afford to lose.
Exploits like that BunniXYZ hack we talked about, they're just a reality in this space. It's innovative, but it's still evolving, still risky.
Absolutely critical advice. Well, what a deep dive today. We've really covered a lot of ground, from those subtle market shifts and the huge geopolitical chess game involving crypto, to the necessary reminders about risks and challenges like those outages and exploits, and then ending on those exciting innovations in real estate and AI healthcare in the Middle East. It just shows how fast this technology is evolving and how global its impact really is.
Yeah, it's been a lot. And looking just ahead, September is just packed with events that could shape things further. We've got that BRICS Summit, September 8th. We talked about the implications there. Then, really crucial, U.S. inflation data on September 11th. Markets will watch that closely. And then just a week later, September 17th, the Fed's interest rate decision. There's talk of a potential reduction that could be significant. And it's just worth remembering, historically, September has often been a bit of a red month for Bitcoin prices. Doesn't mean it will be this year, but it's context.
Right, lots to watch. So here's a final thought for you, our listener, to mull over. As all these massive shifts in geopolitics and technology like L2s and AI and economic policy with tariffs and interest rates as they all unfold, how will they ultimately reshape not just the digital asset space we focus on, but maybe the entire global financial landscape we thought we knew? Something to think about. Thanks for joining us on this deep dive.